This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Christine Stewart.
And I'm Mike Savino.
Mike, I can't believe we're a week away from Originator Connect in Las Vegas. Obviously, you have the shades to show you.
I'm ready.
But I am not looking forward to those temperatures. But I am looking forward to the conference.
Yeah, a lot of this insight comes at the right time. I mean, the market's all shook up right now and sending us a lot of mixed messages. On the one hand, it seems home buyers are coming back to the market thanks to mortgage rates sliding and a record share of sellers dropping their price. Redfin's Home Buyer Demand Index, a measure of requests for home tours and other home buying services, rose by 7 points during the first week of July, and purchase applications rose for the first time in 5 weeks. But that hasn't been enough to boost sales. Pending sales in July posted their largest decline since May of 2020. With sales on the decline, home sales also faced steady price drops. On average, 7.7% of homes for sale each week had a price drop. That's a record high as far back as the data goes, the beginning of 2015. Those drops are making would-be sellers reluctant to enter the market. New listings fell by 11% from a year ago, and this marks the largest decline since June of 2020.
So how do you feel about the market? Fannie Mae polled 1,000 consumers and found they continue to be increasingly pessimistic about buying or selling a home. The Home Purchase Sentiment Index reached its lowest point since 2011. Consumers continue to express concerns about home buying conditions, with only 17% of respondents saying it's a good time to buy a home. Meanwhile, the percentage of consumers who believe it's a good time to sell has begun ticking downward in recent months, falling from 76% in May to 67% in July. An economist for Fannie Mae says unfavorable mortgage rates have been increasingly cited by consumers as a top reason behind the growing perception that it's a bad time to buy as well as sell a home. The percentage of respondents who say mortgage rates will go down in the next 12 months increased from 5% to 6%, while the percentage who expect mortgage rates to go up remain unchanged.
So how can you find more loans to close in a topsy-turvy market? Well, one way is a compromise that can help both buyers and sellers. In the latest edition of Ask an Expert, we hear how temporary buy-downs are becoming popular again.
The builders would prefer to do a temporary buy down as an incentive to buyers than a straight reduction in price.
With the market shifting, home buyers are suddenly finding that they can push for concessions. It's also forcing sellers to get creative. Home builders, for example, are bringing back temporary buy downs.
So if you are advertising lower sales prices, or in certain states where you have publicly available data on the sale price of a home, you put your buyers on notice that you have across-the-board price reductions.
Buy downs are when sellers put money into an escrow account and the funds are used to lower the interest rate in the first 2 or 3 years. Along with builders, buy downs can also be attractive alternatives to realtors.
Buy downs are not really disclosed in the sales price, so publicly available data would show that the house sold at, let's say, the list price and not reflect that maybe there was a $10,000 buy down provided.
Of course, they're also attractive to buyers who can save 2 or even 3 percentage points in the first year of their mortgage.
For a lot of home buyers, the first year, aside from just an increase in their outlying housing costs, is dealt with other capital expenditures, furniture purchases, landscaping, other maintenance costs that they may not have had to deal with in the past.
But even some individual sellers are coming around to the idea.
Individual sellers may psychologically not want to reduce the price that they're willing to get for the home.
So originators should talk with realtors and other contacts to make sure they're aware of this trend.
Because a lot of people in the industry, weren't really around maybe whenever these were big the last time, 2007, 2008, and a couple of years before that.
And they can also suggest it to borrowers who might be worried about taking out a mortgage amid market uncertainty.
They may want the ability to get comfortable easing into the mortgage payments.
You can hear more about temporary buy-downs from attorney Peter Idziak in a recent episode of The Principal, the Mortgage News Network's daily podcast. For the Mortgage News Network, I'm Mike Savino.
Come to Originator Connect in Las Vegas to learn more ways to grow your business. Many of the industry's top brokers and executives will share their insights starting August 19th. You can also get access to Originator Connect if you sign up for Maximum Acceleration on August 18th. Maximum Acceleration is a day-long conference that features advice from top industry experts, as well as SEAL Team 6 vet Don Mann and creativity expert Nir Bashan. For a full list of speakers, go to MaximumAcceleration.live.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to MortgageNewsNetwork.com.